Joining us now, Oxbow Advisors Managing Partner Ted Oakley. Ted, can this kind of optimism in the stock market continue?
I think it will for a few weeks, Dagan. I don't think it's a long-term thing for 19, though. I suspect that bounce from December 24th will last 6 to 8 weeks, maybe, and then I think we're back in the soup again.
Hey, Ted, it's Lindsay Bell here. So what keeps you up at night? What are your biggest concerns, the biggest risks you see facing the market right now? I mean, you do have pretty much the rest of the world starting to slow down. There are signs there. We're seeing some economic data in the U.S. here come in maybe a little bit softer than it had been on a run rate basis. What worries you?
Well, I think what happens is people don't realize the impact that buybacks have had on the marketplace, and I think companies will probably be focusing on the balance sheet, and that impacts the marketplace. In addition, I think that we have a bigger risk of recession than everybody thinks. I mean, we think there's a decent chance that in the last half of the year we're in recession. And if that's the case, all the earnings that are out there now, probably they've gone from 12 to 7%. They're probably too high, and they'll go lower.
Ted, what are the chances again of a recession? The Wall Street Journal's monthly poll says economists see a 25% chance of a recession in the next year. Where do you put the chances?
Well, I don't bank too much on economists because they're usually late on that, Dagan.
I think the panel agrees with you, but what are the chances of recession?
I think the chances are better than 50%.
Wow.
I mean, if you look at the leading indicators, I know the Fed looks at lagging indicators, they look backwards, but if you look at leading indicators, they're telling you that, hey, this thing's probably slower than you think it is.
What's concerning you and specifically why this is going to lead to a recession? What's unwinding?
Well, one of the things, Steve, is you're at the end of a cycle, and you've been around a lot of cycles. I have too. And it's just part of the cycle. You get, I was back on the show back in the summer, and I mentioned that, when you get to the top of profit margins and you get the top of earnings, they roll over. It's part of the cycle. And then the Fed comes in. You had 9 straight quarters up through really the second quarter where we had GDP growing, and it was unprecedented. And it's just part of the cycle. You roll over, things start to go the other way. And I think that's where we are now. And that will play a big part of it.
If we get a good trade deal with China, wouldn't that lift a huge cloud and investment will start to pick up again? Business investment, CapEx?
I think in the news it will for a while. But when you look at China, they're in a declining mode themselves. And I know it would help them to a degree if we go ahead and do something here with them. But I think it'll be tough in general worldwide, and that's the problem we face, I think, in 19.
Ted, thank you. Ted Oakley, great to see you, as always.